Ladies and gentlemen, good day and welcome to Bosch Ltd 4Q FY2023-24 post-results conference call hosted by B&K Securities. From Bosch management, we have with us today Mr. Guru Prasad Mudlapur, Managing Director and Chief Technology Officer, and Ms. Karen Gills, Chief Financial Officer. At this point, all participants will be in the listen-only mode, and there will be an opportunity to ask questions after the management presentation and opening remarks. Open to you, sir. Over to you, sir.
Okay. Good morning, everyone, and thanks for joining the call today. There's a bit of an echo here. Could everybody mute the line? Okay. There's still a lot of echo.
Echo from your end only, sir. You can.
So just give us a minute. We'll see if we can fix it. Run Teams. We can spin in. I can't move off. Okay, good morning again. Thank you for joining us today. I hope it's better for all of you right now. For us, we don't have any.
Better, sir.
Okay, we don't have any echo on our side as well.
Yeah.
Okay. So today I'll begin with a brief overview of the global and Indian macroeconomics. Followed by that, I'll give an update on the automotive market before getting into our financial results. Lastly, I conclude with the business and other key highlights for the fiscal year ending 31st March 24. The global economy is projected to see a flat growth at 3.1% in 2024, same as 2023, before edging up slowly to 3.2% in 2025. Despite the challenging global macroeconomic environment, the Indian economic growth remains positive and very optimistic. The IMF forecasts a 6.5% growth rate for the Indian economy in 2024, with expectations of continued growth into 2025. Robust domestic demand and investments in infrastructure are the primary drivers for this growth. Despite global headwinds, the Indian automotive industry exhibited resilience. Overall, the vehicle production, excluding two-wheelers, surged by 5% during FY2023-24 compared to FY22-23, solidifying India's position as the third largest auto market worldwide. However, Q4 FY24 showcased a mixed performance. While the passenger car, two-wheeler and three-wheeler segments witnessed growth, commercial vehicles remained stagnant, and the tractor market experienced a correction. In Q4 of FY24, heavy commercial vehicle production experienced a correction of -7%, primarily due to the high base established by pre-buying in Q4 FY23 to circumvent price increases ahead of emission norm changes. However, growth in the medium and heavy commercial vehicle sector is being propelled by the bus segment, a trend anticipated to persist. In Q4 FY24, LCV segment grew by 5%, fueled by increased private consumption, e-commerce expansion to Tier 2 and 3 cities, and hub-and-spoke network adoption. However, the risk of three-wheelers encroaching on the sub-1 ton segment remains a concern here. Tractor sales declined by 15% in Q4 FY24, attributed to an erratic monsoon pattern and low reservoir levels impacting rural sentiments, particularly in central and southern regions of India. The tractor segment is notably sensitive to rural sentiments, rainfall, and reservoir levels. The passenger car production achieved a double-digit growth of 11% in Q4 FY24, buoyed by robust demand for SUVs. However, sedans and compact cars experienced a decline as consumers displayed a preference for premium goods. This trend is mirrored in car purchases, with buyers gravitating towards the utility vehicle segment, enticed by enhanced features, superior ride quality, and premium aesthetics. Furthermore, there is a growing inclination towards alternate fuels, evidenced by increased demand for strong hybrids and electric vehicles. Two-wheeler production staged a remarkable recovery, surging 27% in Q4 FY24. This growth is primarily propelled by strong demand from rural customers and replacement demand from urban areas for premium vehicles. However, export volumes continue to face pressure due to local currency depreciation and forex availability issues. Additionally, there is a notable increase in the share of higher-priced 125cc scooters, reflecting evolving consumer preferences. The three-wheeler segment witnessed a growth of 12% in Q4 FY24, indicating sustained demand for passenger transportation. Additionally, this segment has seen growth in last-mile operators, catering to e-commerce and food delivery services, among other applications. While three-wheelers are steadily recovering in domestic markets, export remain weak. In this slide, we depicted the market's journey from its peak in 2018, navigating the challenges posed by COVID to the subsequent recovery. The automotive market concluded on a positive note in 23, reaching an all-time high in LCVs and maintaining momentum in other segments. Looking ahead to 24, factors such as election year and historical trends indicate restrained growth in the automotive industry. Additionally, the erratic monsoon of 23 may impact rural sentiment, potentially affecting tractor volumes. Nonetheless, the underlying economic conditions remain robust and the overarching growth narrative of India remains unchanged. We anticipate a moderate growth trajectory for the upcoming year, influenced by election year dynamics, a high baseline set in the current year, and the impact of erratic rainfall patterns. Sector-wise sales performance. Quarter on quarter, mobility business has grown by 2.7% in Jan to March 24 as compared to Jan to March 23, driven mainly due to growth in mobility aftermarket business by 9.4% on account of increased market demand for spark plugs and diesel products, growth in two-wheeler business by 17.6% due to higher demand and new product launches. However, power solutions business remained relatively flat due to weak tractor market. Consumer goods business grew by 10.5%, driven by higher demand for Bluetooth and accessories. The building technologies business grew by 13.9% on account of execution of high number of orders for installation of security systems. On a year-on-year basis, the mobility business grew by 11.1% in FY23-24 as compared to FY22-23, mainly due to the growth in power solutions business by 10.9%, aided by growth in sales in passenger car and heavy commercial vehicle segments, and higher content per vehicle, mainly exhaust gas treatment components. Growth in mobility aftermarket business by 10.2%, mainly due to higher sales of spark plugs, lubricants, filters owing to higher demand. Growth in two-wheeler business by 19.2%, mainly due to higher sales of fuel injectors and exhaust sensors to TVS and Bajaj. Consumer goods business grew by 15.8% due to higher sales in tools and accessories due to market campaign and new product launches for grinders and cutters. The building technologies business has increased by 17%, mainly on account of execution of higher number of orders for installation of security cameras. The key financial highlights. Revenue from operations quarter on quarter. Revenue from operations in Jan to March 24 stood at 42,334 million INR, which is a growth of 4.2% over Jan to March 23. The growth is mainly driven by mobility aftermarket business, two-wheeler business, and consumer goods business, as seen in the previous slide. Year on year, likewise, overall revenue for FY2023-24 was 1,67,271 million INR, which grew by 12% over previous year. The growth is mainly contributed by increased sales in mobility business and consumer goods business. EBITDA, quarter on quarter, EBITDA in Jan to March 24 was 5,572 million INR, which grew by 6.7% over the same quarter of previous year. EBITDA as a percentage of total revenue improved from 12.9% in Jan to March 23 to 13.2% in Jan to March 24. The improvement in EBITDA margin is mainly attributable to increased revenue and lower spending in other expenses. Year on year, similarly, EBITDA in absolute terms for FY23-24 increased by 15.9% as compared to FY22-23. EBITDA as a percentage of total revenue improved from 12.1% to 12.5%. The EBITDA margin improvement is again on account of revenue growth and lower spending in other expenses. PAT. The profit after tax in absolute terms grew by 41.4% in Jan to March 24 over the same quarter of previous year. This includes a one-time credit of income tax received pertaining to assessment year 2013-2014, as the assessment was completed during the quarter. PAT as a percentage of total revenue for the quarter is 13.3% as compared to 9.8% in Jan to March 23. Year on year, likewise, profit after tax, including exceptional items, increased from 14,245 million INR to 24,905 million INR. The exceptional item mainly pertains to the profit on sale of Project House Mobility Solutions business, which was hived off in July of 23. Profit after tax as a percentage of total revenue for FY23-24 was 14.9%, including exceptional items, compared to 9.5% in the previous year. In the mobility business, the Power Solutions division experienced a 10.9% surge in sales during the financial year 23-24. This growth can be attributed to the rising year-on-year sales of both passenger car and commercial vehicle segments, driven by the adoption of BS6 technologies across diesel, gasoline, natural gas, and electric vehicles. Additionally, TREM 4 projects within the tractor segment and the development of electric vehicle systems contributed to some extent, despite the limited volume in India. We pioneered the development of the first hydrogen engine demo truck in India, demonstrating our unwavering commitment to innovation in the automotive industry. Our company introduced this technology to a diverse array of stakeholders, including OEM representatives, nodal agency experts, ministry secretaries, and legislators at prestigious events such as Symposium on International Automotive Technology and the Bharat Mobility Global Expo. Through these efforts, we are making significant strides towards securing projects with our valued customers, further cementing our position as leaders in technology advancement. Bosch's Power Solutions division plays a pivotal role as a partner for vehicle manufacturers in transitioning from reliance on conventional liquid fuels to alternate low to zero carbon fuels. Our system solutions and products for CNG and flex fuels are poised to support OEMs during this transition period. However, it's worth noting that conventional fuels like diesel and gasoline will remain relevant until alternate energy infrastructure becomes more widespread. Two-wheeler and power sports division achieved a record sales growth of 19.2% over the previous year. This success was supported by stabilized semiconductor supplies, new customer acquisitions, new projects, and growth in the two-wheeler market. The division continues its journey of profitable, sustainable growth, focused primarily on cultivating talent, fostering a culture of excellence, and driving strategic innovations. The net sales of the two-wheeler division are anticipated to rise in FY2024-25 due to the transition to BS6 OBD2 norms and the projected growth in two-wheeler sales following the general elections. The two-wheeler division has proactively prepared for OBD 2.2 regulation upgrade by making appropriate investments in lambda sensor technology, foreseeing a substantial surge in demand by 2025. We are fully equipped to assist our customers with advanced sensor solutions. Bosch is dedicated to supporting Make in India and electrification initiatives by offering comprehensive two-wheeler solutions encompassing engineering, software, and testing facilities. Our solutions, crafted by riders for riders, are engineered to elevate safety, efficiency, and overall riding experience. We are proud to have received accolades such as the Gold Consistent Category Award from Bajaj Auto Limited and a prestigious Performance Award from Suzuki Motorcycle India Private Limited. These recognitions underscore our commitment to excellence and our value partnerships with esteemed industry leaders. The mobility aftermarket division achieved highest ever total net sales in FY23-24 with a growth of 10.2% compared to previous year. The independent aftermarket segment, the largest segment within the mobility aftermarket division, accounted for approximately 63% of the total business, witnessed a notable growth of 9.1% in FY23-24 compared to the previous year. This growth can be primarily attributed to increased sales of lubricants, spark plugs, and filters. The mobility aftermarket segment now proudly boasts of over 50,000 retail touchpoints spanning across 650 districts, offering a comprehensive range of over 15,000 part numbers. This expansive network ensures widespread availability of both products and after-sales services. Additionally, the division operates over 1,500 authorized workshops and service centers, including Bosch Car Service, Bosch Diesel Service Centers, electric modules, and bike service centers throughout India. Furthermore, the mobility aftermarket has ventured into the home segment with the introduction of Bosch i6 inverter battery for power backup solutions. The independent aftermarket segment's growth was driven by the Zinc Plus strategy, focusing on demand generation and market penetration. We increased the visibility with Her Shop Mein Bosch, improved branding in dealer networks, and achieved top retail branding in key towns. The mobility aftermarket division was also honored with 2 awards from Mahindra for outstanding performance in the spare parts division, recognized in both construction equipment and farm division categories. The beyond mobility sector saw a 17.7% increase in sales, driven by growth in both power tools and building technology segments. During FY23-24, power tools achieved significant double-digit growth of 15.8% over the previous year. The manufacturing accounted for 30% of the total power tools sales in India, and the company gained market share across various categories. The power tools business in the coming years is expected to continue its growth trajectory. The focus will also be on cordless tools, industrial tools, dealer engagement, and innovative new product launches tailored to the medium and entry-level segments. Concurrently, medium-priced products will be pivotal, serving as essential drivers of overall business growth. The cordless tool segment reached approximately 11% of total sales, marking its first double-digit contribution. The launch of Cordless Means Paisa Vasool campaign was awarded the Marketing Campaign of the Year by the Global Marketing Excellence Awards and recognized for best use of out-of-home media by E4M Indian Marketing Awards during 2023. A dedicated engineering center has been set up at the Bosch Chennai Power Tools plant. The Chennai plant became the first plant in Bosch at Bosch in India to sign an MOU with the Tamil Nadu government for skill development program. The company also launched a new B2C online repair service to better serve customers. The service network has been expanded to 21 new towns during the year. With the celebration of 30 years of Bosch Power Tools in India, the company has also launched its purpose statement, Bosch Tools in every artisan's hand. The building technologies business achieved a double-digit revenue growth of 17% compared to the previous year, securing significant wins across various verticals. The division secured pivotal projects across transportation, including metros and airports, government, energy, and consumer sectors, which remained significant contributors to business growth. Additionally, support from the education and health sectors verticals further bolstered our performance. We anticipate a positive outlook for building technologies business in 24-25. In addition to the business unit communication, our local for local program has been extended to include business units, video systems, and fire systems. Sustainalytics, a global leader in ESG ratings, has reassessed Bosch Ltd. I am pleased to announce that the company's scores have improved, dropping from 8.5 in 2022 to 6.5 in 2024. Bosch's sustainability commitment is driven by our Invented for Life ambition. Over the past decade, Bosch's corporate social responsibility has positively impacted millions of lives across various locations. During the year, we trained youth, including persons with disability and LGBTQs, with a 68 to 70% placement rate. Our trainers and teachers through the Train the Teacher modules. Our efforts in environmental sustainability include conserving water through rejuvenation, planting, and maintaining trees. In education, we supported government schools, benefiting numerous students and teachers through provision of midday meal schemes, need for basic infra support towards Anganwadis, training students in IT skills. We provided basic health care, including eye care for children and cataract surgeries for the elderly, to many beneficiaries across villages in 4 states. Our Outreach Connected program in over 100 villages connects the rural community members with over 50 government schemes and has trained several women through sustained self-help groups. Additionally, we supported more than 1,000 families through disaster relief and engaged employee and participants of Future Leadership Program at Bosch, who contributed over 10,500 volunteering hours through their time, expertise, and knowledge for social causes. These achievements were made possible by the unwavering commitment of our CSR team, invaluable partnerships, stakeholders, and Bosch employees. Bosch continues to develop and refine CSR interventions which are nationally engaging and locally relevant, empowering individuals and uplifting communities. Thank you all for your contribution and for listening patiently through the call. We will now address your queries. Thank you for your attention, and we are open for questions.
Thanks for the detailed presentation, sir. We will now begin the question and answer session. For participants who wish to ask a question, I request you to please raise your hand, sir, and we will invite your questions in turn. Alternatively, you can type your questions in the chat box, sir. So we will ask the questions from the chat box, sir. We will now wait for a moment as the question queue assembles. I will now take the questions from the chat box, sir. Why did you hive off the OES diagnostic business from the mobility aftermarket? What products were used to manufacture in this segment that accounted for 36 crore revenue? Hello?
Yeah. So thank you for the question, and yeah, I'll give you a quick input on this business, and then our CFO will also add more. So this is a business we carried within our mobility aftermarket division, which was largely doing documentation and wiring and other work for OEMs. Specifically preparing such material for the aftermarket and service applications, diagnostic applications. This business, we see that there is very little growth in the upcoming years because of the nature of the business, which is going largely online and changing the nature of the business moving into the future. And the business itself was relatively small part of the mobility aftermarket division. Globally, what is also happening is that Bosch, through its sister company ETAS, has consolidated this business and will provide this diagnostic business directly to third-party companies. And we felt integration of this business into ETAS in India was the right thing to do, and that's mainly the reason. This is not a business that we foresee to grow over the next years, and the nature of the business and the kind of diagnostic applications that will come in the future of cars and vehicles will be more software heavy, which are handled more by the OEMs, and the kind of things we did would not be the ones which would lead to further growth in this area. And that was primarily the reason for hiving it off. And if you want to add anything, Karen?
Yeah, thank you very much. Yes, and based, of course, on the or looking on it from the perspective of what is our core business, that we then followed our process of valuation from the buyer and the seller side. We also made a fairness opinion on it so that we have a very good and stable proven process in for this hive off. And as who already mentioned, this was then the basis by when we start to effective of 1st of July, we go ahead with the transfer of the business.
Yeah, thank you. Now we will go to the people who raised their hands. So the first question is from Mr. Gokul Mageshwari. I have unmuted her line. You can unmute and ask your questions.
Audible?
Yeah.
Okay. Thank you, Annamalai, for the opportunity. So just first question, I have 3 questions, and if with your permission, I would like to take them one by one. So one of the emerging technologies which is fast gaining acceptance is hybrids. Can you please elaborate what role and what products does Bosch play in this technology globally and in India? And are you working with any of the existing OEMs which are offering this product in India, and what are these products?
Okay, do you want to finish all your questions so we can take it all together?
I would prefer it with one by one, if that's okay with you.
Yeah, okay, I'm fine with it. So we have a full range of, okay, let me restart this way. Hybrids have seen a recent emergence, not just in India, but all over the world. And you know, the new energy vehicles in China, for example, constitute quite a significant amount of hybrids. It's not at least clear how long this phase will last before full battery electric vehicles will come in. and or will become more prevalent, having already come in. But in the meanwhile, I think there is a limited time window in our view for hybrids, and we've always believed in that thing. And as a technology company, we have a full range of products for the hybrid market. So we offer the hybrid energy batteries. We have systems which are for different classes of hybrids. We have from P1 to P4 all classes of hybrids catered to within our product technology. And this we are offering also to the Indian OEMs. Currently, we are talking to several OEMs. Of course, the big ones who have introduced are using the Toyota hybrid system. And the other OEMs are very open to consider us. And we are already in discussion with several OEMs on the full range of our hybrid solutions to be offered.
Great. Thank you so much. Secondly, in the past few quarters, you've been highlighting the urgency to improve margins, and one of the key levers for that was localizations. But are you finding it difficult to justify investment in localizations given the volumes could be still low and there may not be an economic sense to invest? Because when I see the gross margins for the company, this is second consecutive year where we are at a 15-20-year low gross margins, and this is despite the fact that the commodity prices have been fairly soft in the last 12 months. So my question is that where are we in terms of localizations, or should we consider these gross margins as a new normal for the company?
Okay, so I'll give you my take on the localization, and I'll also let my CFO add on the margins part. See, we've always believed in localization for the Indian market, and with or without a subsidy regime, which seems to be prevalent today, we've done substantial amount of localization for the Indian OEMs. In some product classes, we are nearly 90 to 95% localized. In some others, maybe we start at 30% and go all the way up to 65, 70, going up to 90% towards steady state of that product class. So we've always believed in localization, and we've invested in localization in line with that. And we know that our OEMs also fully support this stand that localization should benefit economically. Otherwise, it doesn't make sense all the time. But of course, there are certain areas where there are government mandates on localization, and in that case, even if the technology costs end up to be higher than what it is when imported, we will go ahead and localize, and of course, our OEMs are supportive of that move. So to answer your question, localization, we've never worried about localizing in India, and we've also not bothered about doing it only when there is subsidy or incentive towards localization. We've always done it together with our OEMs as and when it is fully justified. Karin, you want to add on the margins?
Yeah, perhaps on the margins, and of course what you currently see in our profit and loss is yes, a sort of mix, because on the one side we have what we see to come from the conventional products to the common rail products, and as my colleague Guru already said, in the conventional products which we are doing for decades already here in India, we have, of course, a very, very high localization rate already. In the common rail, we are working on it. We are coming up in the localization rates. So therefore, of course, you see this in the gross margin. In addition, besides the finished goods, it's also a component. We are working on the supplier development, even for very complex parts. Meanwhile, here in India, we have the plans or we have decisions made already in the direction of the exhaust gas treatment for the future, which we will start in the SOP in the upcoming years. And I would like also to give you a very good example where we were successful in localization also for export volumes. And this was your question regarding we need, of course, the volumes of the Indian market, but we also have chances in the export business. And here we have a very good example, for example, the spark plugs, where we not only produce for the Indian market, but we also have also export business, and we were very successful here in the localization. So to summarize, we are going ahead with the localization because we deeply believe that this is one of the success factors for our company for the future.
Just to follow up on that, in that case, in our localization as it plays out over the next 2-3 years, should we be expecting the benefits of that to convert into slightly higher gross margins over the 2 to 3 year period, that they should be trending up?
Well, without giving you a guidance, let's say, of course, whenever you have a localization, we are not doing localization because of localization, but in the end, of course, we would also like to see the result in our figures.
Okay. Lastly, this is not a question, but more of a feedback / observation. There's one more related party transaction done, and I know you have followed all the procedures with respect to appointing a Big Four firm and following the valuation norms. I'm not doubting that intent, but unfortunately, it just creates a wrong perception where we end up incubating certain emerging businesses and then we sell it to the unlisted firms of the parent, terming this as non-core. So just as a feedback, whenever you are making future capital allocation decisions, you may just want to be investing in businesses which are core to your strategy, and we would want to prevent situations like this because this is sort of ending up taken up negatively by the capital markets. This is just my feedback, so these were my questions. Thank you so much.
Yeah. So maybe just a quick response on that.
Sure.
See, there is you perceive it that way, but we are, as already indicated a couple of quarters earlier, we are looking at an overall portfolio restructuring internally, and this is done not just in India but also at Bosch globally in terms of how to set up things for success for the OEMs and for us. And in that context, there are some parts which don't belong within Bosch Limited, which are small, which occupy a lot of effort, but they don't really add future revenues or growth. And it's better in terms of management focus to cut down on such and bring in topics which are much more relevant for the future. So keep tuned, and we will let you know how this develops as we move forward in terms of what happens for Bosch Limited.
Sorry, in that context, any more realignments to be done at the portfolio level, or you're largely done with that?
No, I won't say it's all done. So we will give you as and when the information is public, we will let you know. We are working on this, and together with the board, we'll let you know.
Great. Thank you and all the best.
Yeah.
Thanks, Gokul. The next question will be from Dinesh Gandhi. Please unmute and ask your question. Yeah, we could hear you.
Yeah, hi. So continuing on the localization question, so would you update us on the new facility which started about 2-3 quarters back, to what level it has ramped up, and by when it is expected to be fully ramped up?
Sorry, could you clarify a bit? The new facility, you're referring to something?
Primarily the localization of the CV related components, which started, I think, about 3 quarters back. To what level it has been ramped up?
You want to go ahead?
Yes, I assume you refer to the localization of the commercial vehicles.
Right.
So-called injector for the commercial vehicles, where we have ramped up a line in Nashik.
Right, I'm referring to that.
Yes, exactly. So we had a very good ramp up of the line of the assembly and testing. Meanwhile, we had last year, or in the last financial year, we had a ramp up of the component business. We are going ahead with the localization of third-party suppliers also for the raw materials, etc. So overall, localization is ongoing. We have done the main steps already. And for us, of course, now it's crucial that the commercial vehicle market will grow and that we can use all our facilities and all our localized products here in India.
Okay. And you also referred, Karen, regarding AGT also being localized. So when is the SOP expected for AGT localization? And this would be at Bosch Limited level, or that's at the vendor level we are doing this?
Yeah, okay. So let's say the line is on the way and we expect the SOP, the start of production in April 25. Because you have to understand that these are quite complex lines. But it's on the way, it's decided, it's ordered, SOP, April 25.
Okay, and this is at our end and not at the vendor's end?
No, this is at our end. Yeah.
Yeah.
Got it. And the second question pertains to the TREM5 norm. So are we getting any clarity on by when it will be implemented? And in that context, would we need to invest in new capacities for localization, or there is existing capacity which is available?
I would say in general capacity is available. The current indication is April 26 for TREM5 introduction. We hope that standard does not get pushed. It's possible that it's plus minus 1 quarter earlier even. So we are hoping that by 26 first quarter, second quarter, we should be in with TREM5.
Okay, and we'll be starting with very high level of localization over here, considering we have already localized the CV parts. So would there be any commonalities, or we'll have to start from scratch from localization for TREM5?
No, we will start with a fairly good level of localization here.
That's great to know. And lastly, if I look at our EBITDA margins, improvement on YY basis has been quite small, especially considering that we would have seen some benefit of localization, and also there was benefit of divestment of digital mobility business. So are there any one-offs, or am I missing anything over here?
So you refer to the EBITDA margin, yeah?
Right.
Okay. So financial year to financial year, we see an improvement, of course, coming from the EBIT improvement, and we see a translation of our EBIT improvement translated into the EBITDA, of course, with a little bit more depreciations, mainly coming out of the Adugodi campus here. We see an increase in the operation profit by 4.6%.
Okay, considering that we had savings on other expenses on divestment of digital mobility business, would not improvement should have been higher than that?
So you have to see that the investment, and you are referring to the project mobility house.
Right.
It is after the EBIT. It is below the EBIT and the EBITDA. It is between the EBIT and the profit before tax. So what you see in the EBITDA is really the operational development in the profit.
Got it. Thanks. I have a few more questions. I'll fall back in queue.
Yeah.
Thanks.
Thanks, Jinesh. Next in the question queue will be Lakshminarayan. Please unmute and ask your question. Yeah.
Yeah, 2 questions. First is in terms of our exports, just want to understand what has been the mix of exports for this year, And I think in one of the conference calls you mentioned that you are pushing exports as a lever for a slightly longer term. I just want to understand that particular part. What's the mix of exports this year across various product lines? And second, any new initiatives that has come up recently?
Okay, so exports currently for FY23-24 stood at 8.1% overall of our total net sales, and we are working on increasing this over the coming years, but currently it stands at 8.1%. So our approach is that we continuously look at opportunities to increase exports over the coming years.
And of course, if we link this to our to our approach of localization, because it is also important for us if we want to go ahead with the export that we are competitive, and therefore localization in India and the value add here in India is a very crucial point for us.
Are we on the call?
Yeah, we are on.
Okay.
Lakshmi, your questions are over, sir. I think he is dropped out.
He is dropped out.
Yes.
Yeah, I think he has dropped out. Yeah, we'll go to the next one, sir. Sir, I'll read some questions from the chat box, sir. Yeah. When do we expect implementation of OBD 2.2 for two-wheelers as per government notification? Will this be a significant technology upgrade for the OEMs?
Okay, give me a second. It will be an upgrade for the OEMs for sure, but the OBD 2.2 norms should be applicable in 2025.
Okay, sir. And another question from the chat box is, by when do we expect hydrogen ICE to see inflection point?
Okay, so hydrogen ICE is currently undergoing a design maturity phase with most OEMs. We are working with them quite closely. Almost all our OEM partners have now trucks running within their premises or on the streets. We also ourselves have a truck ready, and that's undergoing tests. The component maturity will take a while, but that's not a bottleneck at all. We expect between 10 to 15% of all trucks sold by 2030 to be with hydrogen ICE technology.
Yeah, there is another question on EV. Any updates on EV order wins? What percentage of our FY24 revenue will be from electric vehicles?
We don't divide it that way, but yeah. Do we have a number?
No, we don't.
So we don't have a number on that segmentation, but we are continuing. All I can say is we are continuously increasing our EV share. We are already quite good with our EV percentage in two-wheelers. We are now in serious conversations with several OEMs on e-axles and electronics for the electrification business, and that trend is continuing. So we are on a good path, and in the coming quarters, you will also see them clearly announced.
Yeah, there is a question on building technologies, sir. Parent was looking to diverse building technology business as per October 23 release. By when do we expect this to go through?
We expect this to go through by Q1, Q2 of 2025.
Okay. We'll go to the question and answer, sir. Next in the line will be Veeraj. Please unmute and ask your question.
Questions. First, on the realignment of portfolio in line with what parent has been communicating, will the realignment largely be of some of the businesses going after the listed entity, or it also would include some of the other adjacent products or businesses of other group companies in India coming into the listed entity?
I would not speculate at this point of time on anything. These are portfolio discussions that are currently ongoing, and we will keep you updated as things develop.
But is there a timeline to it? Because I think the parent was talking about by CY24, most of the alignments to be done with. So in terms of the listed entity, do we have internally any timeline to it?
No, I wouldn't put a timeline on it. I would say this is an ongoing portfolio realignment overall. And if I were to give you a broad timeline, then maybe it's the next 1 year. We will see some amounts of portfolio readjustments continuing to happen.
Okay. Second question is, in the past few years, we've been giving some guidance in terms of what we expect the growth, and similarly in terms of capex and the R&D. So for 2025, what would that be for us?
So on an average, we've had a capex of between 400 to 600 crores, 300 to 600 crores, if I can be broader, year on year. And this is a trend that we will continue. We believe this is something that is needed year on year for us, both to include localization and other capex. So this is something that will continue.
And in terms of the R&D and the expectation for growth this year?
Again, bordering on guidance, but I would say the growth of FY23-24 is something that we are looking forward to also in the upcoming year. The first quarter could be a little slow because of the election effects. We have seen that already in the market right now. And there is also a little bit of a liquidity crunch for some of our businesses in the market. And these things should be resolved by June. And after that, we expect a very good year for the rest of the year. So overall, we see continued improvement in our margins and performance as we move forward.
Just two more questions. One is on the OPEX part. I think one of the earlier participants was also trying to understand. In last few quarters, we had this investment in P&L from the Project House Mobility. And I think on an annual basis, we had around 120, 130 crores of losses, which we were investing in the business, which is not there. So what if that is not reflected in other expenses, then what explains the drop in other expenses on a year-on-year basis?
Well, I think we have in the other expenses, we have, as you rightly said, see two topics. One topic is that we do have a lower spending related to the new business, which we hived off. On the other side, we also put in place cost measures which are sustainable. And of course, what we also have to see in the other expenses, besides the variable costs, which we are in line with the growth, that we have in the other expenses also some fixed costs, which we would like to grow under proportional compared to the revenues. So overall, let's say we are working further on the other expenses because we see this also as a very important topic to our competitiveness and of course to the profitability. Nevertheless, I think we are already on a good way. We were in March 2024 on a 14.7%, comparable in 23, 16.8. So besides the lower spending and of course some more costs variable due to the growth, we also see that our cost measures are well fit in the place now.
Okay, just last part. It's again on the localization piece and just trying to get more perspective in terms of how we at Bosch look at it. So when you say localization, is there a change in terms of approach versus the past, say, where we used to kind of localize a lot more internally vis-a-vis, outsourcing or local vendor development in India? And why I'm asking this is, in the past, we communicated that we'll be looking to spend somewhere between 300-400 to 500-600. And that figure also included the PLI, which we were looking to participate. So roughly around 200 crores per annum. But when I look at, say, FY24 also, our spend is very meager, 350 crores odd, and that is below the depreciation run rate which we have on an annual basis. So somewhere, the optimism or the localization which we always talk about, that doesn't get reflected in the numbers per se. And when we look at the product level margins, which we earn at Bosch, for a proprietary product, it's much below than what other auto ancillaries in a commoditized products earn. So it seems a big disconnect. So I'm just trying to understand, is there a marked shift in terms of how we look at localization? And if that is the case, then how one really perceives the use of cash? So these are two parts of the question. Thank you.
There's actually no new view on the investment. If I look at the CapEx 2023 or for the financial year, then we see, I informed you already, we got the new product, the NOx sensor, which is very important in the exhaust gas treatment. What we are looking at, of course, is how can we prepare ourselves, or how can we adjust our existing machines, and how can we upgrade to new generations. What we are doing is that we are using already invested lines and machines, and via upgrade to make them a fit to the new generations. So there is no change in the investment policy. Localization is a key. Also as you rightly said, third-party supplier development, as well as in our own plants. And therefore there is no change. Localization and investment, what we have to invest, we invest.
So just to put it differently, say, I'm not talking about very near term, I'm looking at more next 3, 4, 5 years. For you to achieve the level of localization which you always aspire, like you talked about 85-90% in the past, what is the level of capex one would require in the business? And if the capex intensity is not much because of refitting and upgrading which you're talking about, then what is the use of cash we are looking for?
So we've estimated that our capex requirements will be in the region of 400 to 600 crores.
Okay. And in terms of the use of cash now?
In terms of usage of cash, you mean our reserves?
Yeah, we have a sizable surplus cash on the balance sheet, and even post the capex, it will just keep on building up.
So there is certainly a plan that's being worked on, and as soon as we are clear with it, we will let you know.
Okay, thank you. Good luck.
Can we take only one more caller, sir?
Yeah, sure.
Yeah. Due to lack of time, and the last question will be from Mr. Sonal Gupta. Please unmute and ask your question. Sonal, you can ask. I think he's not able to ask the question.
Probably dropped out. Yeah.
No, he's there. I don't know. Can we close, or I'll go for one more question, sir?
We can close for today.
Okay, sir. Do you have any closing comments, sir?
No, I think we are on a good path in my view. Overall, there has been a continuous improvement in our performance, and we will continue to keep this momentum going for the future.
Thanks, sir. On behalf of BNK Securities, We thank all the participants for joining the call. And special thanks to Bosch management for taking time out for the call and giving us the opportunity to host the call. Have a good day.
Thank you. Thank you, everyone.
Bye-bye.
Bye.